Hello, I'm Asif Farouk of Finextra and we're here at Cybos 2014 in Boston. And today I'm with Lance Gourlay of CR2. So Lance, thank you for joining me again.
It's a pleasure to see you again. You know, we're becoming fixtures here at Cybos.
It is, isn't it? Let's start with retail banking then. It's a very hot topic. What are the current drivers of transformation in the retail banking sector?
Asif, I think we're honestly living in probably the most exciting time that retail banking's seen for the last 30 or 40 years. We've got compliance-driven changes as always. We've got technology-driven changes as always. But for me, the biggest driver of change and transformation is more socio-economic. It's a bit more esoteric. We've got people in emerging markets that have access to funding and economic clout that they never had before. We've got people who have a social voice. We've got social media. We've got people that are dictating to banks how they want to interact with banks, what type of products they want, and also having influence on how they want them to be priced. So, you know, in that sense, it really is a fundamentally exciting change here. Add to that, we've got a lot of divergent, disruptive technologies. You know, I think every bank must be kicking themselves that they missed the PayPal wagon there. But at the end of the day, those are technologies where people are being innovative from a technology perspective, and I think those are driving some of the things that banks are doing these days.
Okay. Are these causing changes in the behaviours then of banks' end customers?
Absolutely, absolutely. You know, there's so much going on in terms of digital money, in terms of the use of mobile technology in the banking sector, and that's being driven by the way the end consumers behave. Consumers also, you know, it's much easier to change banks these days, so we need to have, or the consumers are demanding a much more customer-driven, customer-focused approach and experience, both from the user interface experience and the relationship management. So it is changing a lot.
Okay. What about the response that's coming from the banks? What are you seeing there?
Well, I'm pleased to say that our banks are moving away from the idea of investing more in legacy technology and sweating those assets, but rather moving forward and adopting some of the new disruptive technologies. You know, there's some really cool stuff going on in banks. I'm seeing banks acquiring smaller disruptive type companies, and some of them for good money. So, you know, the banks are taking it seriously, and I think they really are going out to look at those end consumers. One of the things that's driving a lot is, I think, emerging markets. If we look at the Asian economy, the Pacific economy, Africa, you know, we've got a lot more people with money, we've got a lot more people with technology, and we've got a lot more people that are building technology. And in that sense, they are driving a lot of the way that the traditional first world banks are thinking and moving.
Yeah, okay. The response that the banks have, do you think they're achieving the desired effect of what they want?
I think they are. You know, if we look at banks that have moved into Africa and Asia, we're looking at the city banks, you know, Stan Chart's always been there. We're looking at ANZ. We're looking at banks that are actually taking a serious interest in looking at new revenue streams, looking at new ways of dealing with customers, and in some ways actually treating those markets as a way to develop and future-proof technology before taking it back into the traditional first world markets. So, you know, I'm looking at bank share price in general, behaving well, getting the desired effect. So I think this overall embracing of a broader approach to designing and delivering and pricing products is really paying off very well for them.